Bitcoin to $1.2 million by around the year 2034, the next 10 years. It's going to be great. How did we get there, friends? We're just using the normal growth rates that Bitcoin has been doing in the past and actually continuously slicing down the growth rates to get a more realistic approach compared to what Michael Saylor's big bull case, even his bear and mid case. So what I'm going to do now, friends, is just continuously show you where we're headed in the future. And man, the industry is going to big, big, big places. Now, I have this big arrow here, and yeah, it's just going, wow, we go up, yay! Yeah, but it's not the full picture because I've drawn it and I've zoomed out. Look, when you zoom out, it is exactly the trajectory. Okay, you can actually draw a nice line. I'll draw a line from the bottom left going up green, green, green. We passed Davey Soy Hoffman, yay. And then like actually it looks like that, yeah. It's actually that line. That's beautiful. You can see these boom and bust cycles in there, right? You have extreme boom, extreme boom, extreme boom, boom up here, and you can see they're probably getting smaller and smaller over time. They'll probably get smaller over time. But how do we get there? Well, you just compute these growth rates going forward, but there's a lot of controversy, friends, and there's always a lot of controversy with these because, you know, not financial advice, their past performance, blah, blah, blah. We always know that. Okay, shush. Let's play some pump music just to get everybody cranking. Let's get cranking. $1 million! Wow! Yeah, whenever someone says that, they're like, oh, let me guess, an apple is worth $1 million? Nah, it's actually $1 million. But how do we get there, right? Well, let's look at the past, friends, because the Bitcoin growth rates, man, they used to be astronomical. In the first 5 years, Bitcoin was growing at 420% per year. That is 5x, 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 5x. That's nuts, man. That's literally it. So you want to do that? So if you put in $100, you get 5x, 500. And then 2,500. And then 12,500. And then 62,500. And then 300 grand. From $100. That's if you threw it out. Wow, $100 turned into 300,000. Oh man, by the way, that stops at around 2014. So that's crazy, man, because that's it kept going. It kept going. Don't we want all our altcoins to do that? The only reason why I kept going with Bitcoin is because there was no industry and there was infinite amount of risk. Like if your friends, if you imagine you turned, think about this. You put in $100. That's a lot of money back then, man. You took in 2009, friends. Now you have $312,000. All right. Friends, $312,000 back 10 years ago. Yeah, that's like 600,000. Remember, that's pre-zombie virus stuff. You got a house. You put $100 in, you now have a house. And remember, this is pre-crypto money. So people don't understand what crypto is. We're not like desensitized to it. So back in those days, having a house from $100 investment is big, very big. And you're thinking to yourself, oh my gosh, should I sell for the house? Because if I get it wrong, I've lost retirement in the future. It's stupid of me to hold. And then you would also think, right, what would I need to occur for me to be right? And then the answer would be, a world-changing asset class industry to grow and prosper and pop up like mushrooms everywhere and keep expanding. If you sold, you lost. Because guess what? Crypto now is that world-class changing new asset class birthed, right? That's beautiful. So let's go look at the growth rates from the past, friends, because if you look at Bitcoin's past 10 years, it's 72%. Okay, so 72%. So you go back 10 years ago, 2014, I think the price was it was around $680. Okay, $680 10 years ago, 2014. And then it goes down to 280, remember in the bear market. So about $680. So it's $680 to about 65,000-ish, 65, 70-ish, whatever it is. It's around 72% that you slap there. Now, 72% is great. But you want to know, what are we comparing that to? Well, the stonk market, friends, stonks are around 8%. Yes, 8. they're around 8. Now, you get a bit of a bonus because you get dividends paid with you. Yeah, that's actually nice. So you can actually see S&P 500 dividend yield. How much yield do you get per year? It's actually pretty poopy. It's about 1.3%. But it's not poopy. It's because S&P 500 has the most forward-looking, highest growth companies in the world. It's got the winners. And they're not paying dividends because they're winning. They're charging up so much. You're buying the momentum, the biggest winners. So usually when they start to pay dividends, friends, it's because they can't grow as much anymore. So they start taking the cash flow, and instead of using it to grow, they start paying they're paying their customers or the shareholders. So you don't want that. You want to keep pumping. Friends, it'd literally be like, an example, Impulse Chain. If let's say Richard Hart had nowhere to park the capital. Nowhere at all. He had $600 million. Like, I've got nowhere to put it in the world. There's nothing, no option for me exists. I'm just gonna pay you out a dividend if you stake your PulseX and Hex in this thing. I'm just gonna pay you out a dividend, and like every year there's like a $15 million payment or $30 million payment spread out between everyone. It would be like that. However, we don't live in that world. We live in the world where you could buy Ethereum and then bunny hop a 400, 500, 600% gain. Hopefully, at least like 300% gain, 200% gain in that, and then disperse that out, you see? So that's pretty much it. So you think about this. If a company was paying 5% dividend yield, but because Ethereum exists, they could give, so their shareholders are getting just 5% per year. For the next like 5 years, they could give their shareholders like 15% per year. But that's big now because 15%, that's like almost twice the S&P 500. But how would you give themselves 15% per year? You had to grow, right? You had to grow. But it's just that we could see it in crypto, right? You end up buying another product that rises up, you know? But that's why other things they invest as well. They invest in like making stuff to try to sell more items and products and services out there. Now, back to Bitcoin, right? With Bitcoin, friends, it grew 72% per year for those 10 years. But if you check the past 5 years, what's the annual growth rate per year? It's 42%. So it's dropping. It's dropping. So if you look at the 5-year rates, 5 year, that's what I did. 5 years, each portions, it was like 420%. Then it drops down to like, 70%. Then it drops down to about 42%, which is where we are now. You see that? So we're getting smaller and smaller. But I told you, the stock market is 8 and gold is also around 8. Did you know that? Gold is also around 8. But gold and stock market moves differently. See, gold's long-term growth rate is 8%, same as stonks. But gold has to be measured over like a 20-year period. It's a hedge, meant to be a hedge, right? So there's periods where stonks go poop, and then gold goes up, has its own bull market period. There are these periods of history where it's like a decade pretty much, where there's like a lost decade for the stock market, but stonks go up. But it's around 8%. But remember, the stocks, they give you that extra 1.3% yield, and gold has a storage cost. That sucks. So you got to think about that. That's actually adds up to a lot over a long period of time. Over like a 10, 20-year period, you're earning this dividend yield, which you can keep reinvesting theoretically for S&P 500. And gold, it's a cost to hold, you see. But for portfolio diversification, they throw it in there. But yeah, look at these numbers, friends. So you're dealing in the realms of 8s and 9s and maybe 10. Now we have just had, friends, our past 5 years are 42%. So we're still big. Now, Michael Saylor's $49 million target, all right, it has around a 40% growth rate around this. So that's why I'm thinking like, dude, we've been diminishing every year. And now you think for the next 20 years, like you shouldn't even look. I know it's for moon maths and stuff, and it could be like top signal, Bitcoin dominance, whatever, but it's not. Don't even throw that in, man. That's literally, look, because you can throw it in, but it's unwritten. It's not nice to even contemplate that, right? It's not nice to contemplate. It's not realistic. Not even like remotely close to realistic, right? Like at least show us 1 5-year period where Bitcoin didn't diminish in returns. Show me one, okay? When we get to one, all right, now we'll imagine the next 20 years like that. We can imagine that. We haven't even had one, okay? Literally have a sample size of 0 there. Now, what I'm doing is expecting the next 5 years to be friendship onto the upside, and we'll play some nice Pokemon music just to... That's what we need, friends, because if we really want to be the best, we have to think like the best. And the best know the answer because they live in the future. All right? So we have to think like them. And what are they going to be saying in 5 years? They're going to be saying, oh, if I just went back in time and I punched in my calculator the growth rate, I would be able to hold. Yes, that's exactly what they'd be saying. That's exactly what they'd be saying. All right? That's how you think about this. Now, I have a 30% growth rate, friends, from today. Gives you 240,000, and a 20% growth rate gives you 160,000. Okay, so remember we're at 42 today. So if you think we go down to 30, if you think we go down to 20, now I'm hoping it's more towards the 30. I'm hoping we're starting to like taper off, but we're actually cratering down to the floor. But it makes sense, right? You're onboarding the whole world, and look. We don't, friends, as much as I want up to be high numbers, we don't have to be the high numbers, man, because this is tough. All right, look, Bitcoin, look, okay, crypto, Bitcoin, you're half commodity, half stonks. All right, but S&P 500 is a beast of its own. You're betting on the top 500 winners. It is an artificial index. You have a weight of just the winners over time. Yeah, you can't, if you're in the index, right? If you go all in on one company, they can't adapt, but the index can adapt because you're getting more weight as the winners come in. Gold, though, to combat that, gold doesn't change either, and gold still grows at 8.5% per year. But it's not as nice and Ponzi-like as stonks. All right, gold has these boom bust periods as well. And remember, stonk market gets saved by, so when stonk markets deviate, the US government and the Fed will go like, hey, let's bring it back towards the mean. And they just dilute everybody's purchasing power. They print money to bring it back up. If gold busts, they're not printing money to go do that. But it will naturally do it anyway. It just takes longer. Okay? Where do you think we're going to be, friends? I still think we got a chance at maybe it might be 200. Maybe it might be right in the middle, friends. 200K. Which is like instead of 30 or 20, bang, 25%. Worth it will be around 180K. I hope we get anywhere near towards that. That's still great, isn't it? Isn't it great that like we can deal these numbers over? Remember, you're probably thinking about, hey, what about your dark prophecy? Yeah, that could always happen, man. Dark prophecy is always on the cards. Because remember, dark prophecy doesn't mean we all go to zero forever. It just means like too many people get trapped in one thing and then he just takes a pit stop. That can always happen. Now, I even have it drawn here, right, as, you know, this potential up and swoopy down, up. We don't know, okay? But you're just guessing. Now, what about the future, friends? Well, what I've done is I say, well, all right, let's say we do get to this 240K. 240K. What happens after that? Well, obviously, there's going to be a lower growth rate after that. I guarantee you when we get there, people will say, no, we're not going to do a diminishing return this time. Yeah, of course we are. Now, if you stand in the future here, see where we are now? 240K. We are around 2028, 2029. You see, friends, we could hit 200K, but I'm going to draw it just slowly here. We could hit this 200K, 220K, but then 2026, 2027 is like this poopy time. And then we start going up again, you know? So it depends on how far the big boom and the bust is. Because you know those euphoria waves of Bitcoin? It's the crowd front running the next 4 years. That's why you have a big explosion up, returns back to the mean, and then you are still in the next Bitcoin halvening traveling along the mean. You are still traveling along that log curve. So you can actually see these if we zoom in. Let's actually zoom in so you can see. You see these periods, friends. So if you just remember, I drew that line for you. I'll draw it for you again. Like, yay, there's like a line of growth. And then if you just squint your eyes, these periods like, oh, we front run everything, come back towards the mean. See, come back towards the mean. And then here's another big boom. This was our bull market 2021. You come back towards the mean. So we might have another one, but the levels of the euphoria, they are getting smaller over time because the crowd is learning about stuff and there's more capital coming in. It's harder to push the liquidity up. Plus people are understanding, oh, there's growth rates and it's just like digital gold. They understand more of it. So they understand the difference. Because back then, friends, people had no idea the difference between what does a $30 Bitcoin mean and what does $400 Bitcoin mean. They had no idea. They had no idea what even relating it to. The average crowd participant had no idea. But now you do know there's a difference between a 100K Bitcoin and a $600,000 Bitcoin. You know the difference. 100K Bitcoin is 2 trillion market cap, and 600K Bitcoin is now you've basically nearly flipped gold. You see that? You see that? Have that in our mind. The average participant understands it, so they're less reluctant to pay up towards 600K. Whereas back in the early days, they had no idea. They're just throwing it in out of full emotion. And that emotion of retailers can push it up very, very far. But now your emotion's going to be met with big fat sell wars of these other big insider whales who are going to be dumping along the way. So we're still on our journey, friends. Because the next level, friends, is $600,000. So from 2024, 2028, then that 2032, 33 mark is around 600K. Man, that'll be the gold. Maybe gold's even higher, by the way. That'll be the gold market cap. Next one after that. That'll be sweet. Of course, we could always blow the roof again. Like, no one says we have to keep diminishing. We don't have to, but just... Here's the thing, man. It's not... I'm not trying to get you to guess right. We don't know how to guess right. I'm just telling you this. If Bitcoin is $200,000 in 12 months from now, you don't have the luxury of peeking around the corner and seeing whether it hits 600K in the next 12 months or whether it drops back down to 60K in the bear market. You don't have that luxury. You have to make a decision. You have to make a decision with the information you know at the time. It's live. You can't say, oh, I'll just see how it feels, because what does how it feels means? It means if you're wrong, Bitcoin drops 50%, altcoins are down 95% in 4 months. You're like, oh crap, I just ruled myself all over again. I've got to wait another 3.5 years. And now I hope your friend Sommi here, my friend Sommi, wearing a Pikachu hat, is going to be here 18 hours a day. I don't know if I'm going to be around 18 hours a day, friends, to make, oh, what's the new cycle thing? We got to go through the whole new narrative again. Like I don't know, man. They can't have that certainty unless you're more than welcome to spend 18 hours a day if you want to figure that part out, all right? We already went through it as well, friends. Look at this year. 5 coins out of 500 recovered. So if you go back to 2021, pick any coin out of the top 500, you only had a 1% chance of picking a coin that has recovered by now in the Bitcoin halving year. 3.3 years later. Injective, Solana, Floki, Fetch AI, and BNB. Yes, 5 coins. That's it. 5 out of 500. I think those odds are going to be the same though. You know, that means literally in 2025 next year, pick any coin out of 500. It's going to be a 1% chance that you get it right, that coin will have recovered by 2028. That's another 3 notes. So just telling you the odds, man. It's high stakes because you're betting on the crypto industry going up, but you know, Bitcoin's growth rate is slowing down so much that you can't really change your life anywhere near to the extent as early Bitcoiners were able to. And also, you're going to see the rhetoric change from the Bitcoin maxis. They're now saying, get rich slow, get rich slow. You don't need to get rich fast. Like, bro, shut up. You literally got into Bitcoin to get rich fast. Now that it's up, oh, get rich slow. Everyone's on the risk curve. I told you, friends, my biggest epiphanies for you, okay? Everyone's on the risk curve, and everybody peaks further down the risk curve, and they go, oh, you're a gambler. I am the wise risk taker decision. And then everybody above me, like who's taken less risk than me, they have no idea. They haven't done the research. Everyone's on the risk curve. Everyone. So $600,000 will be great. And then if you grow that next rate again, friends, we get 1.2 million. So what I've done is those rates. So how do we get here? I did a 30% to get to here. I changed this down. Now in the next 5 years, I did a 20%. Okay, so that's 30 here, 30. And then I did 20%, and then here is 15. Okay, 15% gives you around 1.2 million by 2022, that growth rate. What happens after that? Well, like, you know, by the way, that's way below the bear case for Michael Saylor. Michael Saylor's lowest case was 21%. His lowest by 2045. Like, just, man, I just don't think people buying a coin offered by Wall Street on an ETF today, when the whole world knows about it, I don't think you're going to be able to get a higher return than Warren Buffett in his peak, getting 20% per year compounded for 50 years. I don't think so. I'll take that other side. I'm like, dude, this guy is literally a godlike oracle I don't think after Wall Street, after JP Mosquito, after the Goldman Slugs, after everyone in the world knows about it, basically everyone like is very, very aware of this. I just don't think, man, the odds are in our favor that, hey, we're all going to outperform Warren Buffett now. I don't think so. You know, the crypto industry could, but that's a crypto industry, which brings me on to my next point. The biggest issue with these, friends, is this is just the Bitcoin price. You see, this is just the Bitcoin price. And yeah, this is the long-term rate. It's nice. It goes up, but that's just the Bitcoin price. We don't have an index yet. If you had an index where you could bet on the whole index, that would be great. Because no matter which altcoin moves up, it's going to keep pushing you up. I actually think, friends, you know these growth rates Michael Saylor's talking about? I think we can get it for the crypto industry. Yes, we can get it for the crypto industry, which includes, you know, Ethereum and then includes all the others in the altcoins and stuff. But I don't think we're going to get it just for Bitcoin. But of course, he'll never admit that because he's a Bitcoin maxi. Of course he won't. And, you know, the crypto industry is growing faster than Bitcoin, right? That's how Bitcoin dominance is going lower and the industry is going up. That's how you know. But also you can see, you can actually do these basic rates here, friends. So we are in 2024. The past 5-year rates from 2019, you can actually see July 2019, we were at 255 billion, and then we have now gone up into 2.3 trillion, which is about, I've just calculated now, it's a 55% growth rate. So instead of Bitcoin, which grew around 42, this was a 55. Interesting. And funnily enough, what I've done now is, friends, you know that 55% rate, I have changed the growth rate to 35%. So it's a bit faster than Bitcoin. I've changed to 35%. Where does crypto land in the next 4 or 5 years? And it grows from 2.3 trillion to 10 trillion. That's actually our target here. It grows up to around 10 trillion, which is right here. There you go, 10 to 12 trillion each. So that's it. But hey, we can hit there now in 2025, calm back down, and then we come back up in 2028. You see that? That's the boom part, the boom, and then we have the bust. So that's actually nice, yeah? That's nice to see. Those are the rates. And if you're curious as well, I can compound that again. Let's go from 35. Let's do the next growth rate period again. Let's drop off from 35 down to 20. And now you have, friends, a 26 trillion market cap in the next one, which is around here. There you go, 26 trillion, right? So yeah, it does make, looks exactly fresh, right? Problem though, once again, you don't know what's in the index. You have no idea, all right? You have no idea what's going to be in the index in 2028. You don't even know what it's going to be in like the next 3 years, friends, because the winners obviously go up and keep winning, and you can't bet on the index. That's why we do actually need a crypto index. But actually, before we make the crypto index, we need coins that just don't go to zero. We need coins that go up. I believe in my loins and my pointy elbows, I think in this cycle, if we can see stuff like Tron and XRP and Hex and many other coins and Litecoin, if they can at least take a stab back towards their highs, I hopefully break the highs. Please break their highs, okay? If we can see them do that, it will be fantastic because it'll start to give everyone the confidence that, hey, these networks, even if they suck in one cycle, like following their peak, they can actually still come back, right? These dog stocks can come back. And why is that important? It means it's fleshing out the use case of, or the popularity of these networks, and you can actually start to make an index. Because right now, if you were to make an index, friends, the only thing you'd actually put into them is actually just Bitcoin, really. Bitcoin. But there is, obviously, you throw in Ethereum. And then you could make a top 10 index right now. Obviously, what's everyone's going to say? Oh, what about Solana? What about Solana? Yes, you could throw in Solana. Yes, you could make a top 10 index right now. You have your Bitcoin, your Ethereum, your Binance, your Soy, your XRP. You got to remove these stablecoins. But yeah, you have some Telegrams, some Cardano, some Tron, you know, maybe because you're removing the, and some Doge. Obviously, you got to put Doge in there. And that's pretty much it. They're bigger market cap ones, okay? That's what it would be. As far as everything else goes, though, that's the next problem. The problem is your life-changing gains is in the next part. But they're so risky, you can't even put them into an index. That's where we come in, though. We're trying to use Sommi's bull market strategy guide, key competitive edges, friends, you know, active community, key information asymmetry, trying to throw all these out, we're trying to pick stocks, trying to be better than the average person. We don't want to just buy the index because there is no index. But like, even if it was an index, would you buy, for example, ICP, Ethereum Classic? Would you buy this Athenia junk? Would you buy Stacks? Yeah, you know what I mean? Like, would you want OKEX coin? Do you want, you know, obviously you have Arweave, and you have some okay stuff. The graph. See, a lot of these coins, friends, their coin distributions are so terrible as well. Like, who's going to regulate the index? How do you get? That's the next complicated part. How do you even make a formula? All right, this is how you get in the index, because you know the stock market have one. They got to be a profitable company, or they have to have a certain amount of conditions. Maybe not profitable, you know, but they just have the certain amount of conditions. What conditions would you make in crypto? How about you don't be a scam? Okay, you've removed everything. We don't know. And who measures the market cap? And can people, like, you know, game their market cap way into the DCA part of it? So we're not there yet. But it's good that we're not there yet. That means we're early, friends. We still have this big growth. It really is changing our lives. So what do you think about that? Bitcoin, simple way, 200K next step, 600K step after that, 1.2 million step after that. I think that's a beautiful trajectory. Just be careful of just holding everything forever. We just don't know how everything's going to go. Will they even all be able to hold up against Bitcoin in terms of their ratios? We don't know that. I guess we'll find out. Make sure you like, subscribe. Catch you soon.